In this month's Hot Topic, we're going to do things just a little bit differently, and that's because Brad Beer from BMT Tax Depreciation has agreed to come on the couch this month and talk all things quantity surveyors and depreciation reports. So, Brad, welcome to the couch.
Great to be here, Rebecca. Talking depreciation on the couch sounds like heaps of fun.
It definitely is heaps of fun. So to kick us off, maybe you can tell us exactly what is a quantity surveyor and why do they get involved in tax depreciation reports?
Absolutely. I come out and started what is a building degree, and out of that I come out as a quantity surveyor. So construction related, we are a specialist in measuring and estimating the construction costs of buildings. Mm-hmm. So we can get the plans, count the bricks.
Yes, good skill to have.
Measure up the concrete, the steel, everything that's in a building. And rather than building it, we actually work out how much it should cost to build it.
Okay.
So we'll work for banks, developers, people who want to build something, people who want to know how many bricks to buy. And so we come up with those construction costings. And the reason we get involved in depreciation schedules is that the claims that we make in relation to buildings have a relationship to the construction cost and the value of items.
Sure.
So when you don't have all costs available, then the tax office says they want someone who knows about construction costs, or what they say is will accept the costs estimated by a relevant professional such as a quantity surveyor.
Sure.
So if you've got all the costs, you can use those, but if you've got a quantity surveyor's estimate who should know how to estimate those things, then they'll accept those numbers that we come up with.
And obviously that gives us a starting point for the Div 43 deduction claims and perhaps other depreciation claims that might be available for properties.
Absolutely. Now, we also need to marry up that construction cost expertise, take away the risk of that construction cost, I suppose, and then know what we can apply where to maximise that Division 43 and make it legitimate, and also the value on those plant items under the Division 40 claims as well.
Yeah, absolutely. So I know a common question we get, so I'm sure you get this question all the time, is it worth getting these type of reports for older properties? Because it's all very well to say, well, we've just constructed a property, so we've got all these costs there. So how does that work, or what would you say to people when they're talking to clients about older rental properties?
I'd always say, ask us the question about the old property and we'll have a look at that property and see if there is likely to be deductions there.
Yeah.
Because old properties don't get as much as new properties.
Of course.
But they still get some deductions depending on some criteria.
Yeah.
That Division 43's got dates that date back in residential properties till 1987 construction. There might be other things done to the property. So clients are often concerned about whether it's going to be worth it.
Yep.
So rather than, I guess, trying to work that out yourself or the client trying to work that out, give us a look at it. We'll give at no charge an idea of sort of what deductions we expect we can see and before they go ahead and sort of spend any money working out whether or not they want to buy one of these things.
Okay, so that would give them confidence to at least have that chat before they start spending money.
Always call a quantity surveyor before you worry about that. If I tell you there's nothing there, then there's probably nothing there.
Fair enough. Now, so there's older properties, but you sort of hinted at this earlier as well. Sometimes with older properties, there could well be renovations and the like, and sometimes those renovations might have not been done by the client themselves, but perhaps they were pre-existing when they acquired that property. How does that work from a quantity surveyor point of view in the tax depreciation reports?
So a couple of things on the renovations. If there's money being spent on a property, there's more stuff there. More stuff's been put in. And really that means whether it's done by you as the current owner or by someone else, there's more money being spent, so there should be more depreciation available.
Yeah.
Now, if it's been done by a previous owner, then that plant and equipment won't be deductible. But the structural works that have been done, the Division 43, there'll be some claims related to that. If you put new plant items in yourself when you do that renovation, there's more things that you've put in that will have deductions available.
Yep.
And the other side to think about renovations is if before you rip it apart, there may have actually been some things that still had residual value there. So almost talk to the quantity surveyor about making sure there's a depreciation schedule in place before you pull it apart in case there's anything that you rip out that has some residual values.
That's it, because there could be a deduction there on the destruction of that.
Absolutely. And we find that that's something that people go, that's where there's some lucrative, I guess, deductions potentially available.
Yeah, and people often forget about that, and then it's all too late once it's all at the tip, isn't it?
Yeah. Look, when we want to make some of those deductions, we've we want to see it's there. You can't go and see it later. It's been thrown away.
Absolutely. Well, my next question, I was really going to ask you what would you say to someone who's trying to determine if it's worth getting a quantity surveyor report? And you've really already hinted at that probably having a chat to you to really work out what's going on with the property is probably the first step there.
Look, there's calculators online you can use to start with, but email us the address. We can usually see what you've paid for it, when you bought it,
Yep.
and look at some of the photos and go, we can see some work here, or it's been built in 1921 and no one's done anything.
Yeah.
We can have a look at that pretty quickly, and we'll gauge pretty quickly whether it's going to be worth actually doing something or not. And we don't do it unless there's going to be some deductions there.
Yeah.
There's no use us going and spending the time and finding no deductions.
Yep. Fair enough. So once you do decide it is worth going to a property and actually doing that inspection, can you take us through what's actually involved in that process?
Yeah. After we've spoken and identified there's some value there, collected some information, we actually go out to the house. So we don't really count all of the bricks, but we collect information about construction,
Yep.
what it's been built out of, the quality of the finishes, what's in there
Yep.
also. So we can work out everything that's in there that is depreciable, get a photo of it. We come back there and we cost it, we work out whatever else you may have done to it yourself,
Yep.
Get that information together, prepare a report. It's not, do those estimates, come up with the numbers, spit out some depreciation claimable each year.
Yep. Okay. And you're talking about actually physically going to the property. So would you always emphasise that there is always a benefit to have a site inspection to create a quantity surveyor report that's going to be worth its mustard when it comes to claiming tax deductions?
Yeah, I think forever we've always had in our industry, can you just do it off the photos?
Yeah.
And we assessed, especially through COVID, where it was much harder to visit them. We looked at a detailed study on 100,000 properties.
Yep.
And we found that the deductions you'll get by going there and making sure that we find everything will outstrip trying to do it from what information you can find.
Yep.
We've looked for everything to help, firstly, get the most deductions from it that we can. But secondly, in the situation of an audit, at some point when the tax officer is asking us some questions about what was there, when it was there, we've had our car pull up, we can see how long they were there, we've got
Yep.
the photos on our system of the stuff that we've taken at the time, which is what we've based our assessment upon.
Yep.
And after nearly 1 million of these things, Rebecca, that we have
Yes.
done, I'm convinced that the results are better if we've been there and actually been through that thing in detail.
And that gives you the confidence in the report. It's something people can rely upon.
And even our institute, the Institute of Quantity Surveyors, our industry, especially after COVID, is sort of, there's a bit more, let's just do it off the photos.
Yep.
And they've said, look, it needs a heap more disclaimers
Yes.
in order to maximise the deduction and be confident in the claims that are being made, that a site inspection should be conducted.
Yeah, and I think the key point, particularly from an accountant's point of view, is we want to maximise deductions for our clients. So that's the benefit there. But speaking of that, I know you've spoken to me in the past. What would be sort of the average claims that you would generally look at once it's been determined, yes, it is worth getting these depreciation reports for a property?
We had a look at the last financial year, got all those numbers together in the 25 financial year, and the first year's deductions in that period of time was just over $12,000.
Okay.
So substantial amount
absolutely.
of deductions, and that's out of all of the properties we've done, out of the different types of ages of properties. There's different amounts of deductions.
Of course, yeah.
Nearly half of the properties we've done were new properties
Okay.
in that financial year.
Yep.
The new properties in the first full year had just under $18,000 in deductions.
Definitely worth the price of a quantity surveyor report.
Absolutely. We also found that there's still a few that we're doing that are built before that 1987 date, which is important for that Division 43 component. Some of those would have had some renovations done by somebody over that period of time.
Yep.
And the average last year in the deductions that we did, of reports that we did that were built back then, was just still like nearly $4,700 in that first full financial year.
Yeah.
Not a big percentage of the jobs now. It was 3.5% of the jobs we did last year. It used to be much higher because some of those really old ones are falling off and not having.
Yeah, they're not worth it anymore, basically.
Yeah. So we tell people that. So.
Yep.
But still, you might have one of the ones that is worth it.
Yes.
And until we actually have a look at some photos and work that out, you may not know. So substantial reductions available. That 12,000 is the average across all the properties we did in that financial year, first financial year. So quite substantial reductions.
Absolutely. And then on top of that, as we all know, the cost of the report's also deductible for clients as well. So it's usually beneficial there. Another question that we often get just around quantity survey reports, which I wouldn't mind throwing your way for your consideration and your thoughts on it, is often, accountants are saying, all right, well, we get the quantity survey report, we've got the information there. Can we just simply rely on that information when we're looking to make our DIB 43 claims in particular there? What sort of, confidence can we have with just simply relying on those reports?
Yeah, look, I'd hope you can rely on our reports. You should, you should be able to rely on any quantity surveyor's report. But I guess, like anything that you do, a sense check of some idea of the rules that do exist. If it looks like it's got ridiculous amount of deductions, then there's maybe some reason to question that. I think, getting to site, being very thorough in making sure we're looking at everything that we can claim while making sure that we can stand by to something that we're very careful to try and do, as all quantity surveyors should be.
Yep, absolutely.
So look at, like everything, a risk there that you probably need to have a look at. And look, does it have the sense test if it's ridiculous?
Yeah.
And then maybe ask some questions. Obviously, every quantity surveyor will have some sort of disclaimer around using the report, like as will an accountant when they do someone's tax returns. But you should be able to rely on the numbers we put together because that's what we do all day.
Absolutely. No, and I think we can have confidence, as you said, because you want to keep the quality of your product strong with those site inspections, putting aside any professional judgment calls that accountants need to make, they can have confidence with what you've done. We don't get to count the bricks, that's your job. But it's good to have that, isn't it? Because we do, at the moment, there's a lot of audit activity for rental properties, so having the right documentation is going to be crucial for these claims.
Well, we do have a lot of clients that come to us when they are getting audited, and we're fine with that.
Yeah.
Usually, if they haven't done a lot of things as well as they could, someone's guessed the depreciation, or what happens most of the time is people are actually missing out.
Yes.
So our clients get audited. We're fine with that.
Yep.
Because we're very comfortable in what we've put together.
Yep.
Usually, a depreciation schedule audit then finds more deductions they were claiming anyway for depreciation. So hopefully that helps with the situation.
Yep, absolutely. Well, having your practical insight into this is very useful. So thank you so much for coming on the couch for us this month. BMT Tax Depreciation has had a relationship for a very long time with NTAA members and NTAA itself. So we do appreciate your time today.
Thank you very much, Rebecca. Lovely to be here.